back end of 2022 when global liquidity, it doesn't give the strongest price action, but I don't know, Bitcoin's up 6x since then. So it does work just by getting the bottom of it.
And so in the past, when we've seen a breakout of the previous all-time high in global liquidity, Bitcoin's sensitivity to the changes in liquidity triple at least, sometimes 4 or 5x. So
Wow.
in my analysis, global liquidity goes up by 1%, Bitcoin usually rises about 7%. But in these particular regimes, that goes to 20 to 30 times. So a multiplier of 5. And what's really interesting is that we got the breakout in global liquidity in early April as the markets were sort of tanking. So that was this low that we went through, which really wasn't much to worry about, like in terms of Bitcoin pullbacks, but it felt pretty nasty at the time. Massively outperformed the S&P, massively outperformed the equities on a volatility adjusted basis, even though, it was down 30% and the S&P was down 20%. On a risk adjusted basis, massively outperformed equities. And so when global liquidity broke out in early April, Bitcoin rallied 40%. Global liquidity from that breakout is up about 2%. That's roughly what it has done in those previous bullish regimes where global liquidity breaks out to new all-time highs. You get a sensitivity factor that is factors higher than it typically is. And so for me, it's interesting that, we're not overbought, based on liquidity. Every new dollar that's created, whether it's even through like the US dollar weakening or depreciating, is an easing on financial conditions. It all adds liquidity into the system or makes financial conditions better, and the relationship is strong. And so, I'm looking at now a market that is not overheated at all. In fact, it's doing what it should be doing, and it's not doing anything excessive. Like, if that is also happening at that time, boy, oh boy, do you have a very strong signal for a looming market top, because derivative like open interest and the factors that go into the leverage component of the derivatives risk score are very finely tuned to tops and also bottoms. So that plus also unrealized profit, which you can see on chain, come together in a very good way, like in terms of the confluence that you can get from it to give you sort of high probability zones of when things will top and bottom as well.